Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Well, Mark Zuckerberg has fired his latest salvo in the AI wars. Just today, Meta Platforms unveiled the largest open source AI model ever. It's called Llama 3.1. The company is also updating its Meta AI service, billed as a rival to ChatGPT.
And in an exclusive interview with Bloomberg's Emily Chang, the Meta CEO and founder opened up about his strategy and why he believes it's superior to competitors such as OpenAI and Google. Bloomberg Originals host and executive producer Emily Chang joining us now from our San Francisco bureau. Emily spoke to Mark Zuckerberg for The Circuit. It is a Bloomberg Originals series, and it's hosted by her, where she goes behind the scenes with founders, executives, and innovators, sometimes gets to wear pink high heels, but I'm not going to talk about that right now. Good to have you back with us. Mark Zuckerberg, man, when we think about big mega cap tech companies, that is certainly one of them in a big way. AI sounds like it was top of mind for you guys.
Well, AI is their big news today, and Mark has been really excited about this new model, the biggest open source model ever. He says it takes it to another level. Like, you can think about it like a teacher, and it will teach all the other models, smaller models below it. And so, getting to this milestone was a really big deal for them. They've obviously invested billions of dollars to get here and to try to catch up to OpenAI and Google. So the interesting thing is they're really coming from behind, but what he thinks is by the next update, they're going to completely have closed the gap. So, it was a really rare opportunity to sit down with him and talk about his vision. And, I've met him, I've interviewed him over the years. I'd also say, he seems a lot more comfortable in his own skin and just like answering questions more directly. And that was really refreshing. I thought we got to see a more real, more human side of him. Okay,
Emily, I want to talk about Llama and I want to talk about AI, but really what I want to talk about is wake surfing.
Aren't you?
Yeah, wake surfing. It's so fun. I mean, it's like I think it's easier than regular surfing. I don't know how you felt about it. You talked in the program about how you were from Hawaii. You got up there and you wake surfed. We're looking at pictures right now.
You're looking at me wiping out.
No,
Tim.
Come on.
There you go, wiping out again, wiping out again. I think we're going to show you the climax here. So, look, I'm from Hawaii, so I have surfed before, but I'm not a surfer, and wake surfing is a totally different thing. It was hard, but actually Mark and Priscilla joined us as well. Was a good teacher, and he was super patient with me, which,
Wait, he's showing off.
What did you throw to him? Yeah. Was it a beer?
I threw him a LaCroix. It was a LaCroix. We were non-alcoholic on this journey, but there, look, I did it.
Yeah, that's what I'm talking about.
Yeah.
That's what I'm talking about.
And it was brief, but hey, it happened. And I think the fact that he was willing to have us at his home and to show us this side of himself, shows a lot about his evolution as a leader and sort of where he's at and just sort of being, confident and comfortable in his own skin. But we also talked about how all these different side quests, as you know, it's not just wake surfing, but he's doing MMA and jiu-jitsu, and he learned Mandarin, and he's growing, his own Wagyu beef cows and feeding them mac nuts in Kauai. But, all of these other pursuits, he just has a ton of energy, at least that's what Priscilla says, and doing all of these other things enables him to focus. But the thing he loves most doing, still, he says, is building, and that means the next generation of AI.
Well, before we get to that, because we do have a clip from the show and your conversation, Emily, why do you think he was so open to showing everything? As you said, you've had many conversations over the years. This was a different side you felt like, or that he was much more comfortable in his skin. Why do you think he's ready to kind of reveal that? Is it that just being older and kind of living life a little bit more? Or?
I think it's just a matter of time. He talked about how when he started the company 20 years ago, it was 20 years ago that he was sort of thrust into the spotlight. He just said, I didn't know anything about running a company, and I would totally mess up in interviews. And then when I messed up, I would get all this negative feedback, and then I would clam up, and I just wouldn't want to talk to anyone. And over time, he's just gotten a lot more comfortable and confident saying what he thinks, and he said if people don't like it, that's fine. If people like it, great. Like, you judge for yourself. This is who I am. And, you know, one of the other interesting things is, you know, we've talked about Jeff Bezos has left Amazon, Larry and Sergey have left Google. There, you know, are these other big tech founders who have taken a step back. I didn't get the sense that was happening at all. Like, Mark Zuckerberg is not going anywhere. He just turned 40. He seems to have more energy than ever. And he's really excited about the next 10 to 15 years building out this AI vision, along with the metaverse and augmented and virtual reality. All of that is still a thing. But he says in the next 10 to 15 years, then the next platform will emerge. And building is what makes him the most happy.
Well, speaking of that AI vision, here's Mark Zuckerberg from your interview on the circuit on controlling his AI destiny. Check it out.
Some people see you as an unlikely champion of open source today. You're laughing.
Well, I don't know why. I mean, I actually think, well, I get it, but yeah.
You understand the word unlikely.
Yeah. We've actually, at Meta, have been pretty big proponents of open source for a while. And it's been a really good formula for us. So dating back to how we design servers, how we design our data centers, we have this whole open compute project that kind of standardized a lot of the infrastructure for the industry. And that's going to happen with AI too.
You're really putting a stake in the ground by open sourcing your AI in this attempt to build the AI rails for the future. How much of this is a strategic way to control or own the next technology wave?
A lot of how we've grown up over the last 10 or 15 years was building our apps through phone platforms that our competitors controlled. So it's somewhat soul-crushing to like go build something that you think is going to be good and then just get told by Apple that you can't ship it because they want to like put us in a box because they view us as competitive. You know, we're a big enough company now that one of the things that I've resolved is that for the next generation of technology, I want us to build and have more control over the next set of platforms that we're going to build. So I think AI is a critical one, and I think augmented and virtual reality is another critical one. It's kind of the way that we can control our own destiny on this and make sure that we have access to leading AI is by building it and having it become an industry standard, but it actually gets stronger by being able to share it and have the ecosystem around it.
You're continuing to improve Meta AI across all of your products, but also as a standalone chatbot. Why should we use Meta over ChatGPT?
Well, there's a bunch of things where it's better. You know, one of the things that we're rolling out soon is the ability to just like imagine stuff. You're typing something in real time. I do this with my daughters all the time. And as you're kind of typing and entering the query, it's just generating the images as you enter the keystrokes. It's just really cool. My goal for the Meta AI launch, which I mean, it's only really a few months old at this point, was to, by the end of the year, have Meta AI be the most used AI assistant in the world. And I think we're basically on track for that. I mean, there's hundreds of millions of people who are using it.
By the end of this year.
Yeah, and I think we're going to be there before the end of the year.
That's Mark Zuckerberg with Emily Chang on the circuit, a Bloomberg Originals series that goes behind the scenes with founders, executives, and innovators. Emily, I have to tell you, the Mark Zuckerberg that we just heard in that clip, he sounds different than the Mark Zuckerberg we've heard on stage at the developers conference, that we've heard in other interviews. He sounded so much more relaxed.
I completely agree. I mean, that question that you saw me ask about being the unlikely champion was basically the first or maybe the second question in the interview. And just the fact that he kind of laughed and pushed back a little, but then acknowledged that he understood. I just thought it was such a great moment. You know, he was a lot more direct in this interview than I've seen him before. I mean, and look, this is still, his strategy is highly scrutinized. He's still one of the most scrutinized people, and Meta is one of the most scrutinized companies in the world, and they deserve that scrutiny because they are hugely influential. It just seems like he's really grown into this role, and I'm glad that he's now showing a bit of that side of himself to us so that we can better understand how he thinks and how he leads, and then we can judge for ourselves.
Well, speaking of influence and showing himself, on a day where we've been focused on Kamala Harris, her first campaign rally, we were just covering it moments ago, you did talk politics with Mark Zuckerberg.
We did, and he said more than I expected that he would say. he, first obviously talked about Facebook's role in elections, and one of the things that they're doing at Facebook is trying to recommend less political content in feeds. He said, the number one thing I hear from people is that they don't want to see political content, and we're listening to that. So I think Facebook will be playing less of a role in the election going forward. But of course, he went on to talk about Donald Trump and the appeal that Trump has. And he did not endorse either candidate, by the way, but he did say that he found former President Trump's response to the assassination, that famous picture of him pumping his fist that we all now know so well, he thought that was pretty inspiring. In fact, he used the word badass to describe Trump's reaction to the assassination attempt. And he was like, I can see why people like the guy. It's a crazy time in America. And the role that I want to play is letting people express themselves, but in a safe and healthy way. And we're going to try to evolve the platform to make that happen.
Well, incredible stuff. Another incredible episode and interview. Emily, thanks so much. So glad we could catch up with you. You can watch The Circuit with Emily Chang tonight at 6:30 p.m. Wall Street time on Bloomberg Television, also streaming at 8:30 p.m. Wall Street time on Bloomberg Originals. Emily, of course, is the host and executive producer of The Circuit from Bloomberg Originals.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Carol, how many times do you think you've heard that AI is going to make our lives easier?
What, in the last 60 seconds?
Yeah, right? It's going to do the busy work for us so we can get to the stuff that really matters.
Right.
Even I was actually typing this in Google Docs and like the automation was trying to fill it in. And I'm like, that's kind of what I'm actually trying to say. So it's a little impressive.
I like it when it finishes your sentences or my sentences.
Okay, so there's this new study out from the freelancing platform Upwork that actually found that full-time employees say that AI has added to their workload.
Wait,
and that
what?
it's even contributing to burnout.
Wait, added to your workload.
Yeah, it's not making things easier.
All right, so what's going on? Kelly Monahan is managing director at the Upwork Research Institute. They focus on the future of work, which includes a lot of conversations, I'm assuming, about AI. She joins us from Chicago. Kelly, what the heck is going on? I thought this is supposed to make our life easier, free us up to do the things that really matter.
Absolutely. I think what we're seeing right now is the classic productivity paradox, where we've seen many times before with other technologies. You saw in our study, 96% of global leaders are saying generative AI should be making the workforce more productive. But the reality is 77% said it's actually adding to their workload. And then I think maybe even more alarming, 44% said they don't even know how to get these productivity gains. And that's resulting in 1 in 3 employees looking to exit their organization because they're feeling so overwhelmed by their job today.
Wow. So what's going on here? Like where is the failure happening?
Yeah, great question. So I think there's a couple of things going on. One, this is still a very new technology, and we are still in that learning phase. I think the mindset shift that needs to take place is leaders are looking for this to drive efficiency. And that's how they're measuring it, and that's where they're putting the pressure on their workforce. When in reality is there's so much unknowns, and this is a frontier. And so what really needs to be taking place is employees thinking of this through an R&D lens. What do I need to be learning? How do I drive innovation? How do I rethink what I'm doing? But instead, what they're feeling is that leaders are asking them to do more of the same, but faster and cheaper. And that right now is just a big disconnect because that's not where we are from a technology perspective.
I want to understand, though, exactly what you guys looked into in terms of and how, what were employees doing with AI as they try to figure out how it can either help or is just adding to their workload? Like, what did you exactly look into, the research study, or was it just a case of questioning, employees? Because I'm curious about who these workers are and how they were using AI.
Yeah, so our study is based on knowledge workers. And this was a global study, so we have representation in the US, Australia, Canada, and Europe. And so what we really focused on were those workers who are already using computer technologies to do their job. And so they had to have some level of exposure to even understanding AI. And what we found was what they're actually spending a lot of their time on right now is auditing the AI content that's coming out. They're then having to train the AI content because a lot of these are large language models that need to be fine-tuned and trained. And the real disconnect that we're seeing is the majority of these individuals are self-teaching themselves. There is no formal structure within an organization that's helping them upskill and actually learn how to do these things, which is why I think there's so much friction today.
Is there any sort of parallel that we can draw in recent history where we've seen a technology that, in your view, actually will be has been this disruptive and companies have had to upskill their workforce?
Yeah, so we've seen this, I think, in a few different times. And now AI has been around since the 1950s, and I know it's gone through periods of winters where it's been overhyped, and now we're in a period, summer period, where there's a lot of investment and there's a lot of hype in what this can cause. And I think this is a good thing. But the reality is all technologies before it have gone through this. A lot of people have compared this to internet computing. So when businesses were mostly done on site and then everyone had to quickly become a digital, some version of e-commerce business in order to reach customers. I think over time, we're going to see that being a pretty good comparison and fundamental shift, where pretty soon you're going to hear the conversation around all businesses have to be AI powered to some degree. We've seen that with cloud computing. I think the problem is right now, this is just happening so fast and we're not giving people enough time and enough runway to really make this pivot and change. And we're expecting too much too soon.
Why do you think it's important that we have this conversation right now?
I think right now there's so much pressure of business leaders. I mean, they're managing such great macroeconomic concerns, whether it's rising inflation, whether it's global turbulence. And I think right now the workforce is looking for something to grasp onto to help make their work lives easier. They've been through a lot as we think about coming out of the pandemic. And what my concern is, and why I think this conversation is so important, is this is a human plus machine conversation. There's so much headlines about just generative AI and how it's going to save the day. But in reality, humans are going to help save the day. And we really need a new model of leadership and talent and work mix in order to get this right. And I think we're at a critical cross point that if we have too much technology investment without enough human development investment, we may be leaving people behind.
So I want to get to some takeaways here before we let you go. Takeaways for knowledge workers who are out there dealing with this brave new world. People like us who are trying to understand and incorporate AI into our lives. What should we be doing?
Yeah, there's two things that I think are critical that our research found, that where people were using AI and it wasn't burning them out and they felt more productive. The very first thing is seeking outside help. I mean, this is, to your point, a brave new world, and there's other people who are much further ahead of this. We've seen this in the freelancer community. They are much more likely to be adopting AI, incorporating it into their workflows. I mean, their livelihood depends on staying on top of the skills. And so this is a great community to go after, to really seek that outside help, to both educate and understand how you can be incorporating AI. And then the second thing, and this is a little bit more called to like a business leader perspective, is how we actually begin to measure productivity. I worry if we're purely looking at efficiency, hours worked, output, we're missing the big conversation that we should be having. Instead, when we saw in our research, people want to be measured against creativity, innovation, how they're adapting to change, their contributions to a company strategy. And that's the conversation I want to see Gen AI play in.
Yeah, it's interesting, and I do wonder, I thought what was interesting also that 1 in 3 full-time employees saying they will likely quit their job in the next 6 months because of the strain that they are feeling from rising productivity demand. And I don't know what that says maybe more strongly or more significantly about kind of the job market, the economic outlook right now. If we don't get this right, then what? Because I just do wonder if it's just, this is the, typical strain. I feel like when we all were starting to embrace the internet, right, and figure that out, that there's always this disconnect as we find our way through some, advancements in technology. As you say, AI is not a new thing, but this is certainly a different level. Is this just kind of a normal transition period?
Yeah, I think, history tends to repeat itself, and we've seen this before. I think what's probably unprecedented is just the speed and pace of change, and I think leaders don't want to be left behind. If we go back to cloud computing, there were early adopters, and I think people who were able to get ahead and find efficiencies and win in their industry. And I think there's that sense of urgency today because this is such a fast-moving technology. And again, it is still a fairly strong labor market. People want to work for some of the best companies who are leading edge. And so I do think there's this urgency to win this game and win this AI race. But I do think we have to have patience. And I think people are feeling it. And that's why the call here is slow down, bring in outside help, and really think about what's the business problem and how are you driving creativity and innovation and not just efficiency here.
Hey, Kelly, Upwork, it's a publicly traded company. How does this change the way that you guys are doing business at Upwork?
Yeah, so AI, we are focused on AI, making our platform and product experience even better for our freelancers and our clients who are coming into search, really just having a much more intelligent experience. From a freelancer perspective, we continue to see this being our fastest growing category on our platform. Freelancers who are using AI are getting higher value work, they're earning more than their peers. And so I think this has been a real game changer for the freelancer community.
All right, we're going to leave it there. Hey, listen, thank you so much. Certainly something to think about. And, we just heard from Emily Chang talking with Mark Zuckerberg about what they are doing, certainly with AI. So this is kind of our world. It continues to be. Kelly Monahan, she's Managing Director at Upwork Research Institute, joining us from Chicago on this Tuesday.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
What do you say, Carol? TikTok?
Everybody. I'm just looking ahead. I'm thinking a lot about some of the earnings after the closing bell. This is a big
What do you
week for
focus on?
earnings.
Tesla, Alphabet? What's the plan?
Yeah, I mean, yes, and yes.
Okay.
But it's just what we're talking about. A third of the S&P market cap this week expected to report. And I just think, Gina Martin-Adams, who we talked to yesterday, said so far, early in the game, the numbers have been coming in really strong.
Don't forget about Texas Instruments, too.
Texas Instruments,
Okay.
yep. Going to be on it. The chip sector, always so important, different aspects to it. But having said that, we're early in the game. So what these big mega cap tech names have to say, really, really important.
Let's see what Jimmy Lee has to say about that. He's founder and chief executive officer at the Wealth Consulting Group. They've got more than $5 billion in assets under management. Usually he's in Las Vegas, but he's here gracing us with his presence in New York City in the Bloomberg Interactive Brokers studio. Sorry about the rain today.
It's okay. I
Sometimes
avoided
that
most
happens.
of it.
Okay. Sometimes that happens. I know it doesn't happen in Las Vegas, but sometimes it happens here in New York. Let's start with big tech. How are you watching what we hear from a third of the market cap of the S&P 500 this week to sort of define this this part of the summer?
Well, as we've talked about before this year, we've been bullish on tech going into rate cuts. And I could not have predicted that we're going to have the run in the Mag 7 and some of the big tech stocks that we've seen so far this year. So it's been a huge run. But we've started to see now, as in the last 10 days, a little bit of a rotation, right, out of the big tech trade and into other areas of the market that really haven't participated as much, such as small cap stocks, even overseas stocks, some of the more cyclical sectors that are going to benefit maybe from a lower interest rate environment, which is how we're positioned. And so
you've been moving into these other areas.
Yes. In April, when we did our rebalance, we added duration to our fixed income portfolios, Carol, so that we can benefit from a lowering 10-year yield. We think that investors should be positioned for more of a 3.5% type treasury at some point, not 5.5% as people were fearing back then.
Right.
And cyclical sectors. So we're long on financials, industrials, still like tech, but I think that investors are going to feel as with fresh cash that it's a little expensive to go into some of these names now.
So what if Alphabet comes out and they blow away the numbers? Do you rethink it again? Which I feel like we've had this scenario over and over again where everybody says enough with kind of the big tech names, look elsewhere, only for them to kind of outperform.
Well, I would say that big tech has actually backed it up with big earnings, right? So most of the earnings came in the first quarter from those big companies, but that's supposed to be different in the second half of this year. So it's supposed to broaden out the earnings expectations of the marketplace, and I think that's what's going to happen. So do you go back into tech on the dips maybe? On some of these sell-offs.
I mean, the NASDAQ 100 down 4% last week. Would you have been buying on that pullback?
Well, people were buying, and I think naturally those companies get a bid just because of all the money going into systematic investment programs and all the index products.
Yeah.
So they're going to get their fair share of buying regardless. But that being said, I think investors actually need to be cautious. I mean, think about 2022. Those group of companies went down a lot as a percentage, and I think that's one of the reasons why they've come up so much since the lows of October 2022. But one of the statistics that we follow is how much money is going into the different asset classes, equities, fixed income, and cash. And since October of 22 on the low, more money has come out of stocks, out of equities, in mutual funds and ETFs than gone in, which is fascinating, right? So all the statistics that we always talk about as advisors, the average investor always getting a small fraction of the return of the actual investments that they own, it's because of market timing or fear or panic. And this happened again. So 2023 and so far this year has been a huge bull market that many investors have not participated in.
What would you say to those investors who haven't participated? Time to get off the sidelines?
Well, I mean, again, I think...
Or did they miss?
I think diversification is important, so I wouldn't say go chase, right? So I know a lot of us as advisors get a lot of phone calls about why don't we have more NVIDIA or certain companies that are in the news that have gone up so much. But I think investors really need to be cautious at this point. So if you've been invested, or even if you're out of the market and you're trying to get back in, I don't think it's a smart idea to try to chase these returns of the ones that have gone up the most. Still being diversified and maybe a little bit more boring if you're going to participate in equities is the way to go. I think an easier trade actually is fixed income. So as I said, with what we think is going to happen with interest rates, you get a nice yield on a fixed income portfolio and maybe some of the money back that you've lost in the last several years on the net asset values of the bonds.
Is that a smart play or a cautious play?
I think it's actually a pretty smart play because of the way the market's rallied so much this year already that we could go a little sideways, could get volatility with the election and with geopolitics, and who knows what's going to happen. And so I think that there's probably as much upside in fixed income probably as there might be in equities right now for the remainder of the year.
Okay, before we let you go, we got to talk politics here because there's been a huge shakeup in the race for president in the last 48 hours. With Kamala Harris now likely to be at the top of the ticket, does that change your outlook at all when it comes to how you're deploying money or how you're invested?
You know, our view is to not try to make too big of bets on who you think is going to be in the White House next time. And so I think investors should be cautious on that. It doesn't always play out anyways. And so, of course, you know, with a Trump presidency, we know what he's been talking about. He's been there before. Yeah. So I think, you know, less regulation, lower taxes, you can kind of count on that, I think. One thing to
lower taxes for some.
Yeah, for some. I think one area to be cautious, though, for everybody is both sides of the parties are against China. And so I think you have to be very careful about your overseas investments in China, especially with Trump, as he talks about the higher tariffs that he may want to try to employ. And we remember what that was like when those first happened. In hindsight, maybe it was a good thing as we sit here today, but I think that could cause some volatility too.
So if someone's got new money, you're saying go fixed income.
Well, I think diversification and
no, I know. Yeah.
So at the top of the list, I just think it's probably a less volatile trade, but you know, diversification I think is very important. Another one is just 3 months ago.
But if diversification's there all the time, right?
Sure.
All you guys, right? I get it. Are you saying though, if you're gonna overweight somewhere, you would say overweight fixed income now?
A little bit, and I think especially for the nervous Nelly investors that maybe got out of their long-term investments in 2022 when the market was going down, and moved into cash for what I call the sucker bet of 4 or 5%, and missed out on the long-term returns of equities since the low of 2022. I think if you're cautious to get back in and you don't want to get whipsawed again, fixed income might be a better way to play it as you're trying to get back in the market.
We just got 10 seconds left.
Sure.
Fixed income for how long?
You know, I think at least until we see the 10-year maybe closer to about 3.5%.
Yeah, so a little bit of a ways to go, but a couple of rate cuts would certainly help us move. I'm just taking a look at the 10-year right now at 4.24. So a little bit of a ways.
One last stat, if I can just give it real quick. 3 months ago, Russell 2000, 40% of the Russell 2000 companies were above their 200-day moving average. Now it's over 70%.
Yeah. So we've seen quite a move up there. Great to have you here in studio. Be well. Jimmy Lee, founder and chief executive officer at the Wealth Consulting Group, joining us here in our studio.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.